tutorial, I will give all the group to deliver their answer, and later I will show the right answer for the tutorial question, and then we will assign the other group to mark the answer given by the responsible group as compared to the answer scheme provided by me, and then later will be directly provide the marks for each group. Okay, so without further delay, I would like to call group 2 to deliver your answer for question 1. Please show your face and also share your answer. And then each group 5 minutes. Okay, so group 2.
Could you hear me, Doctor? Assalamualaikum and good morning to Dr. Engku Ismail and all my friends. My name is Nabila binti Syekh Abdul Jalil, representative from Group 2, and today I would like to present on question 1. Okay, question 1 asks us to discuss the power of Parliament related to the financial management matters as stated in the Malaysian Federal Constitution and the Treasury Instruction. So there are 4 power of Parliament that is related to the financial management matters. Number 1, authority to raise or impose taxes. This is stated in Article 96 of the Constitution. So from the article, it is stated that the government are required to make laws in order to collect revenue, which is from taxes and rates. This is because taxes are not allowed to be collected or imposed without the authorization by the law, which come from the legislative authority, which is the parliament. Number 2, sanctioning or approving the overall public sector financial plan, which is the budget proposed by the executive. This is stated in Article 99 of the Constitution, which state that the government is required to present budget to the Parliament for approval before a commencement year. This could be seen during the presentation of yearly budget in the Parliament around the month of October. However, only the supply expenditure budget purpose is subject for approval from the Parliament. Number 3, limit public agency expenditure to approve allocation. As stated before, the Ministry of Finance will deliver the prepared yearly budget in the Parliament, and this budget will include the allocation that have been divided accordingly among the public agencies. Number 4, authorizing the executive to make expenditure, borrow, and administer programs in accordance with any laws that may affect them. The government has the authority to withdraw the money collected and keep in the consolidated fund. This money are withdrawn for the purpose of charge expenditure, supply expenditure, excess supply expenditure, unspecified expenditure, and also contingencies fund. As for charge expenditure, it is not subjected for approval from the parliament. And for supply expenditure, it need the parliament approval before it can be implemented, as I mentioned before in point number 2. And then the proposed supply expenditure that which comes from the consolidated fund is known as supply bill, and it will become supply act once it is approved by the parliament. If the amount approved by the parliament is insufficient, a supplementary supply expenditure budget can be prepared and submitted to the parliament. The parliament also have the authority to allow unspecified expenditure that occur because of unusual urgency. These 4 powers shows that the parliament has the power to enact, repeal, and amend laws regarding financial management matters. I think that is all from me for the answer for question 1. Thank you.
Okay, so thank you, group 2, and then we call group 5 to deliver the answer for question number 2.
Sir, can you hear my voice?
Yeah.
Assalamualaikum and good morning everyone. We are from group 5. I'm Zaida.
I'm Safira.
I'm Azim.
Today we will present our answer for question 2. Question 2 asks us to discuss the budget preparation process at Malaysian federal government level. In Malaysia, the budget preparation process takes place from 1st January to 31st December. In January, the Ministry of Finance will provide a Treasury circular that will outline the budget estimation for the next year. This circular will consist of 3 things, which is expenditure budget policy, format to be used, and also the deadlines for the budget proposal submission. Every agency is required to prepare a budget proposal according to the budget estimation within the time given, which is from after the circular is given until at the end of March. And at the end of March, agency needs to submit their budget proposal to be reviewed. Next, at the end of March, agency needs to submit their budget their budget proposal to be reviewed. Next, the budget hearings procedure will be done from April to July. These budget hearings will be handled by budget review officer or known as BROs. However, 2 other central agencies that are Public Service Department, PSD, and the Economic Planning Unit, EPU, will be assisting BROs in the budget hearing procedure. The PSD will help in reviewing the agency workforce requirement, while EPU will advise on the recommendation made in the development estimates. Next, I'll pass to the next presenter. Thank you.
In detail, the cash flow position of the government and the agency's ability to administer the program are the only factor during the budget hearing for calculating the annual allocation. The BRO has the overall responsibility of recommending the amount of fund to be allocated for the coming year based on the agency persuasive argument that are made during budget hearing. It's because of accomplishment of past performance and ceiling imposed by the Ministry of Finance itself, which are based on the overall revenue position and its capacity to raise loan to finance this project. Each agency will forecast spending for the year for the revenue budget. In recent year, the Minister of Finance has budget dialogue, which are series of meetings with wide range of organizations representing industry, agriculture, consumer groups, trade unions, and other sectors to hear their perspective on government financial and fiscal policies. The budget dialogue gives the minister a glimpse of public's mood, allowing him to gain vital feedback on current fiscal measure and budget plan. I think that's all for me. I will pass to the next presenter, Aziz.
Okay, thank you, Safira. So next, after the budget hearing are completed by the end of July, it is the time for the presentation of the recommended expenditure budget estimate by the budget review officer, which is BROs. So this process is to ask the consideration from the budget directors and also the submission to the Ministry of Finance. And after that, in September, the budget is sent to the cabinet for the consideration before being introduced in Parliament around October. So in duration from October to December, the Minister of Finance in his budget will present fiscal and financial objective and policies for the ensuing year, which is presented in Parliament as a supply bill. So in this phase, there are also new revenue measures announced as well as the introduction of the finance bill to provide for new taxes and tax structural revisions. So the estimation of each ministry budget allocation is also being debated at various stage in the House of Representatives, after which the minister will move that the supply bill be passed. So for your information also, when the Supply Act gains the royal assent, it becomes law, and by the first week in January, which is from 31st December until 5th January of the budget year, the Minister of Finance issues a general warrant to the Accountant General authorizing expenditure from the consolidated fund. So these steps marks the end of the budget process. So I think that's all from us for question 2. Thank you for lending your time.
Okay, so thank you, group 5. And then we call group 8 to deliver the answer for question 3. Yeah.
Okay, good morning everyone, and then thank you, Buatipong. So I will continue to explain another two forms of fiscal and financial discipline that enable the public expenditure management system to be fully effective. The another form is the resources allocation should be matched with the priorities of the expenditure policy. It means that the budgetary allocation should be in line with the strategy aims. The budgetary resources must be allocated directly to the programs and activities that advance the country strategy aims. However, it's quite challenging to obtain the program cost details. Normally, line agency and local government are in the best position to know the real cost of the program since they are the ones who formulate and implement programs. In practice, the line agency will first propose a low cost estimate for the program in order to gain easy approval from the budget agency. That such a mechanism will never be perfect and will almost certainly be imperceptible. And then this kind of act will affect the budget preparation, budget execution, and the resources allocation are inefficient. So it is important that the government identify the core program and then the non-core program and details of the program so that the resources are allocated in line with the strategy aims. Next slide, please. Yeah, thank you. And then the last form is the minimization of the budgetary management financial expenses. The country should get the best possible value for its money. And then the government also should follow efficient budget execution and cash and debt management method to prevent any wasting of money. For example, the higher of the monitoring expenses, the less monitoring will be done, and then the more severe the misalignment. It is no surprise that in many developing countries, considerable corruption occurs in the public procurement of goods and service. Therefore, the government of the country should maintain the aggregate fiscal restraint to improve allocative efficiency so that the budget and spending are reasonable and appropriate. That's for all from our team. Thank you for your attention.
Okay. So thank you, G8. So now we call G9.
Yeah, Assalamualaikum. Doctor, can you hear my voice?
Yeah.
Okay. Assalamualaikum and a very good morning to our respective lecturer, Dr. Engku, and the fellow classmates. I'm Farah from Group 9. Would like to present the answers for question 4. According to the question, these are the data related to Darul Aman State Government budget for the year 2020. There are 4 information given here: A, B, C, and D. So we are required to prepare an operating expenditure budget, which is the consolidated revenue account budget for Darul Aman State Government. Firstly, we need to find the item that need to be included in expected revenue. First, for tax revenue, look at the yellow highlight. We total the 2 items of direct tax and indirect tax. Second, for the items for non-tax revenue, look at the green highlight. Revenues from non-exchange transaction, we add up the license, registration payment and permits, fine and penalty, return from sales of goods. And revenue from exchange transaction, we total the service fee, return from sales of goods, rental, and return from investment. Lastly, the items for non-revenue received, look at the purple highlight. We total the receipt from government agencies and return back expenditure from non-exchange transaction and receipt from government agencies from exchange transaction. Then we got the total for expected revenue 709,999,980 ringgit. Next, we need to calculate for expected operating expenditure. First, the items for emoluments. Look at the blue highlight. We add up the emolument from charge expenditure and also from supplies expenditure. And for the others expenditure also, look at the yellow highlight. We add from both charge and supply expenditure. Not forget to add the items of supplies and service fee, assets and contributions and fixed charge. So we got the total for expected operating budget 523,500,506 ringgit. Then the total expected revenue will be less with the total of operating budget. Then the total expected revenue will be less with the total expected operating budget. The surplus of operating budget 186,499,474 ringgit. Next, we are required to prepare a development budget for Darul Aman State Government. First, we add back the surplus of operating budget that has been calculated on the revenue account. Next, the total of expected development expenditure 194,378,160 ringgit is calculated from the information stated in C. Look at the yellow highlight, which is 95% of the expected development expenditure is for consolidated state account, and the remaining balance, which is 5%, is for consolidated loan account. For expected water supply expenditure, 158,345,385 ringgit is calculated from the information stated in C also, which is 3% of the expected water supply expenditure is for consolidated state account, and the remaining balance, which is 97%, is for consolidated loan account. Lastly, the surplus of operating budget should be less with the total of expected development expenditure and the total expected water supply expenditure. Then we got the total of development budget deficit, which is negative 466,224,072 ringgit. I think that's all for the presentation from Group 9. Thank you.
Okay, so thank you, Group 9 for. So now we go to question number 5 by Group 4.
Assalamualaikum and hi everyone. Can you hear me?
Yeah.
Okay. I will start the presentation. So my name is Nur Hafiza, metric number 2737714, and I will be representing my group, Group 4, to present question 5. So for question 5, it's about preparing relevant journal entries for the transaction for Smart City Council, which is a local government in state of Kedah for the year of 2021. The City Council uses accrual basis of accounting, and its accounts are prepared in accordance with the Malaysian Public Accounting Standards. So let us look at the first transaction, which is about the City Council approve an annual budget. So to record the approved budget, the journal entries are 1.9 million ringgit will be debited in the estimated revenue account, and 1.7 million ringgit will be credited in the estimated expenditure account. So there will be a balance of 200,000 ringgit, and it will be credited in the council fund balance. So for the next transaction is about property taxes will with the uncollectible percentage of 3%. So the journal entries to record the accrual income taxes will be 1.5 million ringgit are debited in the property taxes receivable account, and 97% of 1.5 million ringgit just now, which is amounted 1.455 million ringgit, will be credited in the revenue account of property taxes as it is collectible. So the remaining of 3% that is uncollectible, which is amounted 45,000 ringgit, will be credited in allowance for uncollectible property taxes account. So moving on to the next transaction, it is about ordering materials and supplies. The journal entries will be 170,000 ringgit are debited in materials and supplies allocation account, and with the same amount, which is 170,000 ringgit, will be credited in the reserve for commitment of materials and supplies account. And this is to record the commitment on allocation reserved for the commitment. So next, the transaction is about a transfer that is made from the general fund to the debt service fund. So for this journal entries, a total of 70,000 ringgit will be debited in general fund account, and with the same amount, which is 70,000 ringgit, will be credited in the debt service fund to show the transaction of that transfer. So for transaction E, there will be two journal entries here. The first journal entry is debit reserve for commitment of materials and supplies account with the amount of 170,000 ringgit, and credit materials and supplies allocation account with the same amount, which is 170,000 ringgit. This is to record the reserve on the entry commitment of allocation. So for the next journal entry is debit expenditure, which is 172,000 ringgit, and credit account payable with the same amount, 172,000 ringgit, and this is to record the expenditure realized for that materials and supplies just now. So for transaction F, it is related to borrowing. So the journal entry will be debit bank account with the amount of 120,000 ringgit and credit notes payable with the same amount, 120,000 ringgit for the loan on 90 days note that have been made in the transaction. Okay, so for the last transaction is the City Council received a total of 20,000 ringgit grant for repairing a public park, but the grant has not yet earned. So the journal entry for this would be debit cash account, which is 20,000 ringgit, which is they earn the grant, and credit deferred revenue of the same amount, 20,000 ringgit, because the grant has not yet earned. So I guess that is all from our group. We hope that this answered the questions. Thank you.
Okay, so thank you, group 4. And then now we move to the question 6 from group 3.
Assalamualaikum and good day. I'm to Dr. Empu and fellow classmates. Doctor, can you hear me?
Yeah.
Okay, I'll proceed then. Okay, so I'm Nur Sharafana Zulkarnain and the other 3 group members. We will present you the answer for the first 4 transaction of question 6. Question 6 requires us to provide relevant example for each of the transaction with Malaysian Federal Government Consolidated Fund, describe the meaning and also state the accounting treatment under the modified cash basis accounting for each of the transaction. So as for the first transaction A, revenue from direct and indirect tax. Firstly, let's take a look at the meaning of direct tax and also indirect tax. Direct tax here can be considered as those taxes which must be paid by the person on whom they are levied. Its burden cannot be shifted to another person. While for indirect taxes, are considered as those taxes which are levied on commodities and services and it affects the income of a person through their consumption expenditure. The burden of indirect taxes can be shifted to someone else. As for the example for direct tax, it will be land tax for state government. Meanwhile, for example, indirect tax, duty for federal government. For accounting treatment, this transaction A will involve consolidated revenue account where we need to debit cash and also credit taxes revenue where it involves both direct tax and also indirect tax. Next, I will pass to the next presenter, Umu.
Alright, for the next transaction is the income from investment on trust account. So the meaning of this transaction is a fund that include fund that is set aside or borrowed to fund a future capital expenditure or for the repayment of long-term debt. And the example of this transaction is bond. And lastly, the accounting treatment for this transaction is debit cash and the credit income from sinking fund investment. That's all for question 6B.
Okay, moving on to question C. There are 2 things. There are 2 transactions, which is the first one is general deposit received. For example, deposit received from contractor, and the second one is general deposit payment. The example for this transaction is deposit paid to TNB. So what is deposit? It is a transaction involving a transfer of money to another party for safekeeping, where this portion of money used as security or collateral for the delivery of a good. The accounting treatment, to record the journal entry, we need to open a consolidated trust account. To record the collection of deposit, we need to debit the cash and credit the deposit received. Whereas to record the repayment of deposit, we need to debit the deposit and then credit the cash.
Next, for question 6D, for charge and supply expenditure approved transaction, charge expenditure is referred to all expenditure that are being charged directly to the consolidated fund under Article 98 of Federal Constitution. So it is not subject to the budget approval. The example of charge expenditure is audit general remunerations. The accounting treatment for charge expenditure in consolidated revenue account is debit expenditure, charge and supply, and credit cash. For supply expenditure is referred to all expenditure that need to cover the operation of ministry, department or government agencies. So it's subject to approval by legislative before being implemented as it mentioned under Supply Act Article 100. The example of supply expenditure is emolument for government servants. The accounting treatment for supply expenditure in consolidated revenue account is same as charge expenditure, which is debit expenditure, charge and supply, and credit cash. So that's all from my group. Thank you.
Okay, so thank you, Group 3. So we invite Group 6 on question 6B.
Doctor, can you hear my voice?
Okay, continue.
Bismillahirrahmanirrahim. Assalamualaikum. I am Nur Mariam with metric number 268-039. I am the representative from Group 6, which I will present for question 6B. Okay. Question 6B consists of 4, this is the continuous from the previous presentation just now, E, F, and G, H. First, E, contribution to housing loan and development fund. It is yearly activity and exercised through yearly budget. This contribution is an internal, both contribution is an internal contribution. And then this contribution involves CRA to CTA. And it is under charge expenditure or supply expenditure. Now let's move to the treatment. There are two treatments, which is first contribution to housing loan fund. It is debit contribution to housing loan fund and credit cash. The second one is contribution to development fund, debit cash and credit development fund. Now let's see the example. The example is federal government have transaction during year 2020, which is sinking fund contribution amounted RM20,000 and charge expenditure and supply expenditure contribute to housing loan amounted RM50,000. The solution is first, debit cash RM20,000 and then credit development fund. This is to record the contribution from CRA to sinking fund. And then debit housing loan fund RM50,000 and credit cash RM50,000. This is to record the contribution from CRA to housing loan fund. Now let's move to the next question. Doctor, can you still hear my voice?
Yeah, continue.
Yeah, but the slide stuck.
Huh?
Doctor, I'm not sure why my slide.
Maybe your friend can help.
Okay, anyone can help me to share screen?
Okay, continue.
Okay, Bismillahirrahmanirrahim. Sorry for the technical issues. I will help Nur Mariam to continue for the next question. Okay, for the next question is the transfer from to development fund. Sorry. Okay, for this transfer to development fund, it involves the transfer from CLA to CTA. And it can be made when the purpose of borrowing the development. And then the government may take the external and domestic borrowing from the private sector or the internal organization for the purpose of development. And then the method of the borrowing, such as the treasury bills and the government bond. It will be recorded as SCLA and then transferred to the CTA since the money is from loan. Let us move to the treatment. For the treatment, it consists of two journal entries, which is debit cash and credit loan. Treasury bill, which is loan, is used to record the loan made through the treasury bill. And then the next entries is the debit development fund and credit cash. It is to record the transfer to development fund through long-term debt. Let us see the example. Sold the 7% treasury bill to United Kingdom market for the purpose of capital to build Borneo Tower amounted 90 million. So debit cash 90 million and then credit treasury bill loan 90 million to record the loan made for the treasury bill. And the next journal entry is debit development fund 90 million, credit cash 90 million to record the transfer to development fund through the long-term debt. Let us move to the next question is transfer for COVID-19 fund. It is this fund is need to approve by the controlling officers and the approval need to be voted by the senior officer. And then the annual limit is 5% per vote from the environment originates. The fund will be under the consolidated trust fund, which is CTA, and then environment to be checked by finance officer, signed by initiator, vote holder, controlling officer, and officials that are responsible for the budget. Let's see the accounting treatment and the example. For the treatment, it will be debit cash and the credit COVID-19 fund. It is to record the contribution. And then the example is the legislative. They approve the contribution to COVID-19 amount 5 million, which is debit cash and then credit COVID-19 fund. And for the last question is loan recoveries from federal statutory bodies. It is under the consolidated loan fund, which is CLA, and then the payment that received from the borrowing is under federal law. The government will increase all outstanding loan locally and externally. And this fund is made up of borrowing, which are loans issued under federal law and their repayment, as well as the public debt, which refers to all the government existing loan, both domestically and internally. Let us move to the treatment. So for this for the treatment is debit treasury bills and credit cash. Let us see the example. In January 2020, government had to make specific borrowing to the treasury bill amounted 500,000 and made repayment on the end of the year. So the solution is debit treasury bill 500,000 and then credit cash 500,000. That's all from our group. Thank you.
Okay, so thank you both of yours from group 6. Now we invite group 1 to deliver the question for 7A on journal entries.
Doctor, can you see my screen?
Yeah, I can see your screen, your face also.
So we are from group 1. We'll present the question 7A. This is our group member. And the question requires us to prepare the journal entry for BMCT Council for the transaction. This is a trial balance as 1st January 2021. And this is the first info. And so we debit estimate revenue, credit estimate expenditure, credit estimate transfer to debt service fund, credit estimate equity transfer fund, and we get the estimate fund balance 200,000 in credit balance. This is the info 2, and the info 2 said that the liability is 165,000, cash is 100,000, and the BMCT Council is desired to arrange a short-term loan 200,000. So we debit cash 200,000 and credit not payable 200,000. This is info 3. So we debit voucher payable, debit due to amount due to federal government
30,000 and credit cash 165,000. Next is info 4 say that the item of account payable in 2020 will be judged to 2020 allocation and will be paid in 2021. So we debit account payable 2020 and credit cash 45,000. Next, info 5 state that the commitment entry are issued with a total 800,000. So we debit commitment 800,000 and credit accumulated commitment 800,000. Next, info 6 said that at the end of 2020, the deferred revenue permit and license amount to 20,000 is reflected in the beginning trial balance as revenue. So we debit deferred revenue permit and license to 20,000 and credit permit and license revenue 20,000. Next, info 7 said that the budget revenue is 3,200,000 and 2% are uncollectible. So in order to generate revenue 3,200,000, the gross levy must be this amount. So we debit the gross amount tax receivable and credit estimate uncollectible current tax 2% and we credit assessment tax revenue 3,200,000. Next, info 8 said that the BM City Council received late payment of 330,000 and interest and penalty 10,000 as receivable. So we debit cash 340,000 and credit assessment tax receivable 330,000 and credit interest and penalty receivable on tax 10,000. Next, I will pass to next presenter.
Okay, thank you, Chai. Now I would like to continue the presentation. So for the info 9 to record the collection of assessment tax receivable for 2021, we will debit the cash and credit the assessment tax receivable with the amount of 2,700,000. Next. For the info 10, we want to record the revenue for permit and license. So we will debit the cash and credit the permit and license revenue account with the amount of 2,800,000. Next. For the info 11, we want to record the repayment loan and interest to the local bank. So we will record we debit the notes payable 200,000 and debit the interest 5,000 and credit the cash with the amount of 205,000. Next. For the info 12, we want that have two journal entries. The first journal entry is to record the reverse on entry of commitment on allocation. So we debit the accumulated commitment and credit the commitment with the amount of 800,000. So the second journal entry is to record the approve of supplies expenditure. So we debit the supply expenditure and credit the voucher payable with the amount of 800,000. Next. For the info 30, they also have two journal entries. The first journal entry is to record the gross payment of the payroll for employees. So we debit the payroll with the amount of 3,345,000, credit due to insurance 78,000, due to EPF 430,000, and credit cash 2,837,000. And for the second journal entry is to record the deduction of insurance and EPF. So we debit the due to insurance 78,000, due to EPF 430,000, and credit the cash with the amount of 508,000. Next. For the info 14, we want to record the expenditure for the fire hydrants and water service that provided by the water utility fund. So we debit the expenditure fire hydrants and water service and credit the due to water utility fund with the amount of 80,000. Next. For this info, we have two journal entries is to record the write-off for allowance for uncollectible assessment tax receivable and interest and penalty receivable. So in the first journal entry, we debit the allowance for uncollectible assessment tax receivable and credit the assessment tax receivable with the amount of 30,000
And the second journal entry is debit the allowance for uncollectible interest and penalty receivable and credit the interest and penalty receivable with the amount of 3,000. For the last info, we want to record the deferred revenue permit and license. So we debit the cash and credit the deferred revenue permit and license with the amount of 40,000. That's all from us. Thank you.
Okay, so thank you, group 1 for the answer for question 7A. And we continue on 7B on the statement for the same question prepared by group 10.
Assalamualaikum and very good morning to Dr. Engku and my fellow classmates. So I am a representative from group 10. The question B require us to prepare the statement of financial performance and statement of financial position for the year ended 31st December 2021 for BM Kot City Council. Next. Okay, for the statement of financial performance of the year 2021. We need to take a revenue minus with expenditure to get the excess revenue. So in the revenue, we have assessment tax, which is 3,200,000 plus with 2,700,000, and we get 5,900,000. So for the revenue of permit and license, we have 2,820,000, which is from 2,800,000 plus with 20,000. And the last item for revenue is interest and penalties, which is 10,000 minus with 3,000, and we get 7,000. So the total revenue we will get 8,727,000. So for the expenditure, we have short-term interest, which is 5,000, and materials and supply 800,000, and salary 3,345,000. And the total expenditure is 4,150,000. And the revenue 8,727,000. We minus with 4,150,000 of expenditure, and we will get the excess revenue amounted to 5,577,000. And the excess revenue we will add with the operating transfer from the water utility fund, which is 80,000, and we will get the fund balance 4,657,000. So for the statement of financial position as at the year 2021. So for the asset, we have cash, assessment of tax receivable, and interest penalties. So for the cash, we take the amount 100,000 in the trial balance, and we will add 200,000 and minus 165,000 and minus 45,000 and plus 330,000 and plus 10,000 plus 2,700,000 and plus 2,800,000 minus with 205,000 and plus 40,000. So we will get 5,765,000. So for the assessment of tax receivable, it is the same. 400,000 we get at the trial balance, and the adjustment we will refer to the journal just presented by previous group. So for assessment of tax receivable, we will get 3,305,306 ringgit. And the assessment of tax receivable, we will deduct with uncollectible assessment of tax receivable, which is 75,306, and we will get 3,230,000. So the third item is interest and penalties. The interest and penalties we will get 22,000, and we will deduct the uncollectible of interest and penalties, which is 10,000, and we will get 12,000. So the total asset will be 9,007,000. Next. So for the liability, we have a voucher payable. We had 800,000 with 3,345,000. So we will get 4,145,000. And deferred permits of and license, we have 40,000. So the funds balance, we have a concealed fund balance, which is 244,000 minus with 80,000, we will get 165,000. And excess of revenue, we will get from the previous statement, which is 4,655,000, and we will get the total is 9,007,000. So that's all from us. Thank you.
Okay, so thank you, Group 10. And then we call the last group, Group 7, to deliver question number 8.
Doctor, can you
Okay, continue. Okay, Alia, continue.
Assalamualaikum and good morning to Dr. and friends. Okay, my name is Nur Afida binti Razuki, 272682. I will present the question number 8. Okay, our group must present the state of comprehensive income in EU group. In its slide, please. For the revenue parts, the deferred is 9,467. For the rental revenue is 800,104. For the grant administrative 5,669,900, and grant for research is 83,700. 719,660. For the grant of development, which is 94,401,693 minus by 455,069,900 and minus by 719,660, we get 156,612,133. And for the income of subsidiary, we use 25% because the 75% has been recognized as cash. So 25% multiplied by 142 billion. 430,922, and we get 35,607,731, and the total is 739,633,085. Okay, for the capital research has a tuition fees, which is 60,790,233. The hotel fees is 18,348,966. The profit of fixed deposit is 18,000,000 187,483, and we get the total capital receipt is 97,326,682, and the trust fund receipt is 100,855,918, and the total revenue is 938,119,685. Okay, so I will pass to the next presenter to present the expenses part.
So I will explain for the next part. For the under and expenditure, we have emolument, which is 467,746,992, and then we have services and supply, which is 241,856,008. For employee benefit, we have, which is 452,642. And then we have administrative expenses, 1,827,574. And we have consultation and training costs, 70,209,105. And then depreciation expenses, 143,094,749. And then other expenses, 54,159,478. So for the total operating expenditure, we have which is 980,450,548. And then for the development expenditure, we have interest expenses on long-term loan, 10,634,387, and then we have interest expenses on short-term loans, which is 7,089,591. So the total development expenditure, which is 70,723,978, and then the total expenditure, which is 1,139,526. So total revenue minus with the total expenditure, we got a deficit for the ENU comprehensive income, which is 63,019,841. That's all from our group. Thank you.
Okay, so thank you for all the group presentation. Now we have 9:49, and then I would like to come from yours. Shall we extend another 10-minute class for me to show you the answer for all the question? Okay, so because I think important, but I give you my general views on that. I'm sorry to say that there is the marks for all the group. Group 1, Group 2A, Group 5A, Group 8, 10, Group 9, 10, Group 4, 10, Group 3, 7, Group 6, 5, Group 1, 10, Group 10, 3, and Group 7, 6. I will deliver letter through WhatsApp group. But my main concern, I will share the answer for the certain question only, especially the question where the presenter provide a very bad answer. And then for those who provide who get the mark is 10, I think I will not share due to the time frame. Okay, so let we look first on the question 1 and question 2. What are the main reason for the question one from group 2 do not get the full marks. Basically, the answer given is right, but not enough. Where you do not touch on the TI, because the question want you to get from both the power of the legislative on financial management from the perspective of the constitution, and also from the TI. So from the constitution, we have the power related revenue, expenditure, and also the financial statement, which is do not touched by the group 2. And from the perspective of the TI, which is you need to refer to the TI number 6 on the power of the parliament related with that. Okay, and then for the question number 2 that provided by the group 5, the group 5 mostly give the process based on the timeline, which is you provide not actually the budget process, but more toward on the budget timeline. So therefore, you provide based on the time, January, February, and so on. Actually, when we talk about the process can be divided into 3 parts, which is the formulation, approval, and execution. So that is the budget process. And execution actually is go through around along the year in the execution, because execution, it is starting with the 1st January until the 31st December. That is the execution process. Approval may be taken around 3 months, starting with the presentation until the approval to become the act. Okay, and then question number 3 and question number 4, I think it is provide clearly. You can base on the answer given by the presentation group. So which is, this is question number 4, similar to that, where we have the budget on the consolidated revenue account, and also budget on the Darul Aman State Government on the development account budget. Okay, that is question number 5 on the journal entries. I think that it is okay also on the Smart City Council, who are practice the accrual based basis, which is provided by the group 4. Okay, but I would like to stress on the question number 6, where both group are trouble in providing the answer for the question number 6. On the first one, 6A, which is provided by the group number 3. So this group have a misunderstanding the question by they focus on the what we say, they focus on the direct and indirect tax. They are not focused on the transaction, but they are focused on the object. So in the this is, if you talk from the perspective of the budget, yes, because you provide what are direct tax, what are indirect tax. This is not the object, but the main thing in the question C is on the accounting treatment. Accounting treatment, you need to look on the transaction. What are the transaction? The transaction here is talk about the revenue, talk about the income from investment, talk about the deposit, and talk about the charge and supply expenditure. Not talk about the object of there. So that is the main witnesses of the group 6A. And the second one is when you prepare the entry, so need to be clear. So which consolidate account you will charge debt transaction. For example, on the A is under the CRA. This is charged to the CRA. While for the B is charged for the CTA. For the C, charged to the CTA. And for the D is charged to the CRA. Okay. On the question, the answer provided by group 6, all wrong. First, you are starting with the E until the H. So this is same as that. When you do not refer to the transaction, there is transaction is contribution. What are the contribution? And if you understand, if you look from the diagram in the page 5 in the textbook, you can see that if they talk about the contribution, it must come from the CRA to CTA. If you talk about the transfer, it must come from the CLA to CTA. Means that these two group of the transaction, it must be involved to a different consolidated account. And then for the E, so for the CRA journal entry, we debit this and then we debit this, and then this is for the CTA journal entry on the same transaction. So and then F for the transfer. What are the transfer? Means that this is the internal from the CLA to CTA. And then what are the entry for the CLA? What are the entry for the CTA for that transaction? So for the COVID-19, if they are transfer, means that fund come from the borrowing. If COVID-19, but if fall under the contribution, it comes from the CRA. So you understand directly. Therefore, you need to understand what mean of the transfer, what mean of the contribution, and this is the journal entry. For the loan recoveries, they are only involved the CTA, not CLA, because this is loan recoveries. Loan recoveries from the federal territory, means that the federal statutory body repay the loan given by the federal government to them. So therefore this matter. Okay, and then for question 7A, I think this is right. You prepare a journal entry, so therefore I do not. But for the 7B prepared by group 10, sorry to say that you are prepared the very wrong, because you do not refer to the, as I said, that this question from textbook, we based on the not based on the MPSAS, but based on the MASB format. So therefore, you need to understand the difference between the MASB format as compared to the MPSAS format. So the current year, right now, the local government are practice the MPSAS. So therefore, their account need to be different. But this is under the MASB format. You are wrong. Both of the format and also the figures here also wrong. Therefore, you get a very low mark on that matters. And then there is for the financial position. So also there is a mistake on the figures and also on the format. Okay, for the last question, question number 8, this is for the public university. So also the group have a problem. You need to understand the public university, they are practice the follow the PERS. They prepare their statement based on the PERS, and then that group mostly figures they make it wrong because they are prepared not accordingly. Secondly, they are calculation is mistake. So we have total income totally different and expenses totally different also, and then you get the surplus and deficit after tax, which is you do not consider on the income tax and so on, because this is the consolidate account for the public university under the MPS. You need to refer to the MPS. Okay. So with that, that's all for today. Sorry for your time. I take it more due to the problem we facing earlier. And then thank you very much. We can see. Don't worry for those who have low mark. You still have a chance for the second tutorial. We will. I will upload later after we complete the next discussion topic on the Monday. Inshallah, we will cover the LN topic 9 on the financial management accountability. Okay, so with that, that's all for today. Sorry for your time. Thank you very much.
Thank you, Doctor.